Alright guys, when a crypto asset pushes into extreme momentum territory while its price remains well below historical peaks, every serious trader takes notice. XRP's daily relative strength index recently reached an intense level of 88. The exact numeric RSI reading printed during its July 2025 all-time high of $3.65. Yet, with the current price hovering near $1.48, the market is presenting a striking structural contrast that demands closer scrutiny. So, is XRP showing early technical weakness near major resistance? According to a technical observation shared on X by analyst ChartNerd right here, XRP is exhibiting classic signs of a building bearish divergence. ChartNerd emphasized that this elevated daily RSI reading of 88 coincided directly with a sharp rejection at the 50-week exponential moving average. When you evaluate the broader structural context, XRP has been navigating a multi-month period throughout 2026 marked by a sequence of lower highs bounded by a prominent red descending trend line right here. ChartNerd noted that while market participants paid hyper-focused attention to the RSI when it was deeply oversold just weeks ago, many seem to be ignoring the implications as it surges past 80.75 into heavily overbought territory. Now, here's my opinion. I view this elevated RSI alongside a 50-week EMA rejection as a distinct warning sign that buyer exhaustion may be setting in. When speed outpaces structural price progression, it usually signals that the upward drive is running on thin air rather than sustained institutional accumulation. Now, could standard momentum metrics be misleading XRP traders across longer time frames? The narrative around this momentum signal is far from unanimous. The technical comparison drawn by ChartNerd was directly challenged on X by an analyst going by the handle AdaptiveRSI. So let's just highlight this part. All right. AdaptiveRSI explained that standard 14-period RSI measures short-term price momentum against its underlying wilder 14-period exponential moving average. Consequently, matching RSI values between today and July 2025 simply indicate that recent short-term velocity was similar in relative intensity to the rally before the $3.65 peak, not that the macro price outcome must repeat. AdaptiveRSI argued that evaluating structural momentum across a 13-month window requires longer look-back tools like an RSI 200 or specialized candlestick adjusted RSI indicators on TradingView to avoid false macro signals. Now, here's my opinion. AdaptiveRSI raises a crucial nuance that prevents retail traders from over-interpreting short-term indicators. using a standard 14-day metric to draw direct parallels across over a year of market history is like comparing two quick sprints without measuring the total marathon distance. And finally, for our overall conclusion, the debate surrounding XRP's daily RSI reading of 88 highlights the tension between short-term momentum and long-term market structure. While ChartNerd points to the 50-week EMA rejection and lower high trend line as evidence of a building bearish divergence, AdaptiveRSI's counter-analysis reminds us that standard 14-period indicators capture short-term velocity rather than macro tops. As XRP trades around $1.48, monitoring how price interacts with primary resistance lines will be key to determining whether momentum consolidates or breaks down. Alright, and this finally ends our video. Thank you very much for watching, and see you on the next one, or you might just as well check out this next recommended video right here.